Hey everybody, time for some more Winning on Wall Street. Welcome to this week's edition of Wall Street Winners for August the 10th. Of course, we're making new equity highs in our portfolio. All right, let's take a look. Whoa, wow, it's just all uphill from here. Okay, so S&P goes and has a nice little streak of about 6 winning days in a row. The main thing here is that the purple predictor, the purple line, accelerated to the upside. Now, we talked about this before, but it looks like the smart money is stepping in. Perhaps they think it's the end of COVID. Perhaps they think that the stimulus package will finally pass. Perhaps they think the Fed will throw $100 bills out the window. Who knows? But it looks like the smart money is stepping up and buying. Now, over here, whoa, look at that green line in the upper right-hand corner. It just took off. Now, it's at a high level, but it can go much higher. Also, selling pressure decline. That's the little red line. And even more importantly, the black line, the thin little black line in the upper right-hand corner, it started to go up. Now, what that indicator is the ADX, and it is a strength of trend indicator. So by it going up, it's effectively saying, hey, this trend is bullish. Now, you can see it's been kind of bouncing around flat for a couple of months, or for a month, I should say, saying that the market was pretty much in a neutral mode, and the Dow was, not the NASDAQ, but the Dow was. But now it's saying even the Dow is starting to perk up. In fact, all right, let's take a look over here. So the NASDAQ, of course, went and made a new all-time high, including just Thursday, we made a new all-time high. But take a look at the little thin green line underneath. When we first broke to new highs on Monday, the green line wasn't there. It hadn't made a new high. That green line is RSI and suggests that we'll see a little bit of a dip this week. And I think we'll probably see that in all the indexes. Simple correction, simple profit taking, no big deal. Now, our seasonality indicator, because it's between May 1st and October 1st, it's going to be neutral. It's always going to be neutral. But look at what's happening down there. We got a nice big up day on Friday, and it sure looks like we could break to new highs, and that'll get us long the Utes. Looks like, well, see, here you go. The top line, which is the line we should be focusing on the most, is suggesting we'll see a little bit of a dip this week. The middle line, which is less important, says we'll go sideways. And the bottom line also, which is not applicable this year, also suggests that we're going to see a sideways pattern. So look for a little bit of consolidation this week. No big deal. Now, over here, the yield curve. As we've been talking about, the Fed is really targeting this. And as you can see, we kind of bounced up a little bit, but this is drifting slowly lower. And this is not helpful for the market, actually. The fact that it's positive is always positive for the market and the economy. But we really can't get excited about it. Asset allocation, they're taking money out of bonds, putting it into stocks. So you got to realize that there's literally trillions of dollars in cash and bonds. So there's no shortage of potential money that can come into the stock market. So don't even worry about it. Don't worry. If people get bullish on stocks, they'll find the money. Risk indicator, really very, very stable for the last 6-7 weeks. Creeping higher this week, but really nothing significant. So what is it telling us? What it's telling us is that the market is torn between, should we take on more risk or should we take on less risk? So in a way, you can look at this as slightly bullish, because if they were really worried about the market, they'd be bailing out and screaming for less risk. If they were wildly bullish, then we could be potentially near a high. But being just slightly bullish, it means this is a sustainable bull market for a while. Okay, EFA not as strong as the U.S. market. It's starting to weaken. Last week I said I might start looking for some buys over here, but I don't think so. All right, bonds. Once again, we made a new multi-month high on Thursday. Purple predictor starting to degrade. So a little change in my attitude here. I've been bullish on the bonds for quite some time. I'm now going to put myself as neutral on the bonds. The economy is weakening, but I think that's already discounted in the price. We already have Treasury note yields at like 0.5%, so it's not like they can go too much lower. So there's not a lot of money here. I put on my trades here partially as a kind of a hedge against a bear market, and that's still a reason to hold. But I'm going to get out now, and we'll kind of come back to them at another time. And so same thing here. I mean, this suggests that interest rates should go lower, or actually higher. I'm sorry, higher. But the Fed, they're manipulating the rates, and as a result, they're going slightly lower. Dollar finally showing some stability after that run of bear move. And if there's stability in the dollar, up until Friday, we were in great shape. On Friday, gold took a header, though. So, it is what it is. We'll just keep rocking and rolling. Okay, our indicators, what do you call the one on the bottom? I guess neutral. The top two are still slightly bullish for gold. Crude oil is finally sort of stabilizing here. Like I say, I've not been in, what happens when you trade is you get in sync with markets. I called the oil market like perfectly for the last several years. And right now, I don't have a good handle on it. When you don't have a good handle on something, the best thing in the world is to do nothing. So I'm going to sit here and say, I don't know which way it's going to go. And so I'm not trading crude oil right now. Bitcoin, I told you, more bullish than bearish, obviously, with a big purple predictor rally, a breakout to the highs. Not ready to buy it, though. I don't know. I'm just concerned. But if you're long, that's fantastic. Obviously, always keep a good stop loss to protect yourself. But if you're thinking of buying, you could buy a break above 12,101. That would be the place where I would consider buying, which I'm not right now. All right. Don't forget, I'd still, even though we're in a bull market, we got to be ready to protect ourselves for an upcoming bear market. So send an email, get yourself a link to a webinar that I did recently, and see all the reasons why and how you can protect yourself and how you can make life-changing money. Really, you owe it to yourself to watch this webinar. Lots of hardcore, useful information that you're going to really learn a lot from and enjoy. All right, freebies. We will talk to you later. Fully paid up members, you, of course, are the cool kids in the cafeteria. Hold on for just a second.